Too many people think of their company's money as their own. I know the temptation. It's very easy to be in the position of feeling like it's your money. But as you may have learnt the hard way at some point, it's essential that we think of them as separate. On the whole, the UK is relatively generous when it comes to allowing business owners to take advantage of their hard-earned company cash. But it's essential that you manage it properly and you don't end up making easily avoidable mistakes. How do you think about the funds in your company? How do you manage the funds in your company? Do you even manage them? The temptation, especially if you are a relatively new business owner, is to get so concerned with the company that you forget to look after yourself. There are so many ways that you could be getting more out of your company. Lots of people might have a really healthy balance sheet inside the company, but every time they actually want to realise some of the benefits of their company's success, they haven't set things up in a smart way to do so. People often accrue huge amounts of cash in their business and neglect to think about how to clearly arrange things. People forget that company money is actually the company's money, and waiting until you suddenly need it is going to result in you paying a load of tax where you might not need to. So strategies exist to get funds out. The most common way to do this is by paying yourself a basic salary and then topping up with dividends. This means that you are paying reduced rates of tax on the funds you are taking out, and on top of that, you and the company are saving national insurance contributions. Are you making regular pension contributions out of the company funds to put the money into your own pocket? Pension contributions are tax relieved up to a maximum amount of £60,000, provided you meet the criteria, and also reduce your overall personal tax liability. So that means you could be saving tax even on the funds you are taking out. Have you considered, for instance, whether your partner could get involved in the business in some way? In which case, you might be able to make a pension contribution on their behalf, and unlike with personal contributions, this isn't limited to their salary. This means that provided you meet the criteria, you could be getting £120,000 extra per year out of your business and into your personal portfolio. Why are you unhappy leaving large sums of cash in your bank account, doing absolutely nothing, but you don't think twice when it comes to company funds? Just because cash is in the company account doesn't mean that it can't be generating some value. Deposit accounts and corporate-friendly fixed-term deposits are an option, but you are also able to just invest the funds in line with an investment strategy which suits the company's goals and timescales. If you know that you want to keep these funds in the company, but you aren't necessarily going to need them for a number of years, why not try and get some value for your money? I hope that was useful. If you've got any questions, put them in the comments below, and be sure to check out the rest of this series on my channel. And also, please do like and subscribe. Thanks, see you next time.